This weekend, we have a strong pipeline of webinars for you to attend. The first one is corporate bonds versus government securities, where we will talk about where you can focus your debt investments. The second one is how to stay calm and invested during uncertain times. The third one is for the ones working from home, where we will guide you in how you can use your savings to build a high quality mutual fund portfolio. The fourth one is where we will look back at 2024 to see how the global markets have performed in comparison to the Indian markets. And we will also look at what are the new opportunities for investors to invest in the coming year. So if you are interested in any of these, click on the description below to register now.
So welcome back to the second session of Talking Straight with Shyam sir. It's like I have few more questions to ask him out. So let's start. Currently, when we young investors start out, we start with mutual funds because that is a very easy entry point for us. But let's say a certain time later, after we build a lot of capital, that time we would also like to try out investing in stocks just as a hobby or something. So how can a beginner start exploring that apart from let's say tracking newspaper and so on?
You have to learn how to build a portfolio. When you buy a mutual fund, that work is being taken care of by the fund manager, who is highly trained and skilled. Now, if you are going to take your money out from that person and you do it yourself, you should start acquiring those skills. And you should acquire those skills well before you start investing in equity. Suppose you have to meaningfully put some money in equity. Let's say you have to put up 50 lakhs. You can't start the portfolio and learn how to invest in equity at the risk of these 50 lakhs. You should do it with much smaller sums but with much longer time. Only then you can do direct stocks. Most people don't have the time or the inclination but just have an aspiration to do it themselves. And also today industry tells you don't go to this person, don't go to that person. It's all don'ts only. So in some instances the industry may be right also. I don't want to say they're wrong. You know, if you don't have the skill, it's better you go to the right person. And if you have the skill, yeah, you can try. Evaluate with the peer whether your skill is adequate to do it. Keep on doing that evaluation. And when somebody whom you respect tells you, yes, you can do it, go ahead and do it. There's no harm.
So, sir, in this case, it's like you also would read certain content and newspaper on a daily basis, and there are a lot of noise in the market. So, how do you filter it out? And what is your, let's say, way of thinking regarding the same?
Market will always have a lot of noise. Market will always be full of noise. Market is like a cricket stadium. It will keep erupting whenever there is a shot. But investor needs to focus on what he needs to do. You should lose focus of your priority, why you are in the market. And you should not be led by the noise. You should be led by your conviction, which means that you must lead yourself away from the noise all the time. Then your conviction is safeguarded first. Then you can grow your conviction next. So these are all options before you, and I don't think you should let go of those options.
So, sir, in this case, you have built your experience for a long period of time, and does at certain point of your investing career, does intuition work out or it's purely data driven?
Most of the time you have to be driven by information and data. In a decision, nearly 60-70% will be these two. But intuition does play a very big part. But you have to practice it long enough to know how to use it, because if you wrongly apply intuition, it could lead you to a very bad place. There are many people whom I know who are friends of mine who have gone out of the market because they did everything by intuition without learning fundamentals. Once you know fundamentals, then apply intuition. Learn how you can apply intuition selectively, very selectively, and how you can apply it qualitatively, and then apply yourself. That's all.
Right.
Then you will be fine. Saying I won't learn from others because they, dress in a particular way or do something in a particular way or tell you something which you don't like is not the right thing. Because somebody is from some geography, you can't say I won't listen to you. Listen to everybody and listen to yourself. When you listen to yourself, intuition starts going into your decisions.
Perfect. So in this case, it's like you have built your journey, you have achieved financial independence. It's like is the lifestyle upgrade changed for you? Or let's say, for example, while buying something, how would you enjoy it without feeling guilty by spending the same?
See, today, if you are earning above a certain threshold in India, you pay anywhere between 30 and 40 rupees of your income as taxes. So, in such a high tax regime, if you don't enjoy the fruits of your earnings, then the sacrifices you make will be far higher than what you will get as an outcome. Also, market has ups and downs, so you cannot postpone enjoying life when the markets are good and giving you money. Because when the markets are down and not giving you money, you will never be able to do it. So, an investor must spend adequately, have a certain budget, live well in that budget, and not overly worry about savings if you have gone above a certain threshold of wealth.
In this case, like you are a personal finance expert, you have seen the market, you have experienced it and seen. So, is there any specific thing that you don't regret while spending twice or so?
No, once you have a need to spend, why regret? Suppose you need to buy a bicycle. Don't say that if I had a friend, I would piggyback on him on a bicycle. If you have to go on a holiday, don't say that my family is nagging me, that's why I am going on a holiday. If you have to buy a car, don't say that I am buying it because there is too much peer pressure, therefore I am buying a car. Do everything with conviction and do it within a budget. And if you are leveraging to do whatever you are doing, have a clear plan how do you bring the leverage back to zero. So this is how I would view the whole thing. And after a certain time in your life, you will have to consume because there is nothing else you can do with money. Money has got no use for you if you are not going to enjoy your life. So I rather you start that early than late. And by starting it early, you give yourself a head start in this field. You will do better than others. So at a later stage, you don't have to worry about maintaining lifestyle, about upgrading. Everything will happen.
So, sir, have your goals changed in this investing journey and lifetime? And let's say from moving ahead, what are your big milestones that you're setting for yourself?
My goals do change. So once you achieve financial freedom, your goals change. Before you achieve financial freedom, you are thinking of reaching that place. But as you come nearer and nearer, you will start wondering what will you do after this. And when you are in that frame of mind, when you don't know what to do next, you have to go back to the drawing board, fix your priorities, assess what it takes financially to live that experience, set that money aside, and then again continue with life. So you need to be very, very focused, specific, and capital ready.
So it's like, sir, at what stage of your life did you think to add more real estate component in your portfolios? Is there any thumb rule that you follow?
See, I have been owning real estate for quite some time. I sold my real estate once. Now I bought back all the real estate they sold in some other geography. That's about it. But for a business, we keep buying real estate because we don't like to rent premises. So those things are also contributing to real estate orientation. But broadly, real estate is something which you should buy on a need basis. If you need, you buy. If you don't need, then renting may be better because the moment you're done with that hiring and you enjoyed it enough, you can give it back to somebody. Otherwise, when you go to sell, whether you're going to get the same price, a lot of these problems start coming up. So you should avoid all those problems.
So what's your approach in dealing with underperforming assets and how do you figure out it's the right time to exit it?
No, when an asset is underperforming, I would have a natural tendency to give it more time. I will not rush to exit. But when they give us that exit, I will grab it.
So, while selecting a company or let's say any investment avenue, what is the key thing that you prioritize? Or let's say in this journey, what is one thing that has excited you most about seeing or reviewing a company specifically?
See, seeing companies turn around, seeing companies improve themselves financially, seeing companies generate significantly higher return metrics on capital employed over long periods of time. All this gives you a satisfaction that you spotted it early, you stuck to it. It's a matter of reassurance and personal satisfaction. That's what I think it is.
So it's like you have been doing this investment journey for yourself and managing a big business too. So how do you manage it both hand in hand? So in short, like how do you plan your day out?
See, those days was a lot of hard work, that's all. We don't have the kind of distractions you have today. Firstly, technology was not so widespread, and data was not even there probably in the early years. So we had a lot of time. By virtue of that, we didn't have distractions. Because you have distraction, you put in more time into your work. You cannot but put in more time in your work. So that helped us.
So sir, if you could summarize your investment philosophy in just one word or one sentence or one phrase, what would it be?
See, I like to buy growth at a reasonable valuation.
That would be the main point.
That will be the main part.
Perfect. So sir, maybe it's like at a closing point, you can let know what are the top 3 underrated books of finance and investing that you ever read?
I think Benjamin Graham's Security Analysis and Intelligence are right up there. I put Poor Charlie's Almanac very much in that league. In fact, it's one step probably higher than some of these books. Also, I like to read books on individual companies, industries, to understand how a business group or company did exceptionally well. And you start building what I call as ideal traits in entrepreneurs.
Okay.
And when you see a guy and he talks to you, you understand whether he has some of these traits or not. You also have some stock questions you'll ask them. So monitoring is very simple. Sometimes I don't have to meet that person also. In his circle, somebody will ask about this person, then he will tell us that this is the situation.
Thank you for being part of this session and staying till the last. We would have few more interesting content coming right your way. So do subscribe.